Hi, my name is Fan Yang, your Chief Technical Strategist here at ForexMinute.com. You're watching today's Forex video briefing. It is Wednesday, September 10th, and we're in the middle of the US session. The Australian dollar was strong going into the weekend, but completely reversed it this week. Let's take a look at the Aussie US dollar, Aussie yen, and the Aussie New Zealand dollar charts and see what this means from a technical perspective. The Aussie US dollar pair has clearly broken below 0.92 and thus has put in a price top that has been forming since April. You also see price breaking below 38.2% retracement and this 200-day simple moving average. So we basically have a bearish signal. Now, if price pulls back, we should expect some. Well, first of all, this breakout opens up the 50% retracement here at 0.9080 to 0.9085, and below that the 61.8% retracement at 0.8988, 0.8985. Now, if there is a pullback, and that is possible as the RSI dips towards 30, and let's say we get a pullback from this 50% retracement, we should see resistance around 0.9250. And then we could confirm for the bearish outlook. Now, when we look at the weekly chart, we can see a bearish prevailing trend that has held its bearish momentum as evidenced by the RSI holding below 60 after tagging below 30 and even touching 20. You also see price falling below this 50-week simple moving average. Thus, the 0.8847 2013 low and the 0.8660 2014 low will be viable targets for the rest of this year. While the Aussie US dollar pair is opening up a bearish outlook, the Aussie yen is signaling a pullback after a major bullish breakout. We can see that price broke above a multi-month consolidation which had resistance around 96.50. Now price has tagged 98.67 and is showing a bearish attempt for the short term, at least. Now, if and when price gets back into the 96 to 96.50 area, we should start looking for buyers. This is basically the resistance area of a previous consolidation zone, and we can look at that as a possible support area upon this after this pullback. Now, holding above 0.96 should confirm the bullish outlook, at least back towards the 98.67 high. A break below 95.50, however, will put price below the 150-day simple moving averages, and therefore can pull Aussie yen back into the consolidation mode, especially if the RSI falls back below 40. The Aussie Kiwi pair, or Australian New Zealand pair, has also been building a bullish outlook after consolidating for the first half of the year. In July through August, price started to signal a bullish outlook after pushing and staying above the 200-150-day simple moving averages, which have shifted into bullish alignment and are spreading apart. The RSI also shows bullish momentum developing. So this week, however, price retreated from last week's high, just under 1.13. We should probably expect some support. Now, if this extends lower, we should probably expect some support in the 1.09 to 1.10 area, which contains a previous consolidation range and the 100 and the 50-day simple moving averages. And if the RSI is also back at 40, we should expect some buyers. So, and that would maintain the bullish outlook. Right, if price can then come back above the simple moving averages, now the bullish outlook would still be in play. However, a break below 1.08, would bring the Aussie Kiwi back into the neutral bearish mode with pressure back towards the lows this year in this 1.05, 1.06 area. And that wraps up today's Forex video briefing. Once again, I'm Fan Yang, your Chief Technical Strategist here at ForexMinute.com, wishing you safe and good trading.